Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. So let's take a look again on the gold market. So today, as usual, we have prepared a weekly report where we have taken a look mostly at some additional issues in the financial sphere, in political sphere that could make impact on gold price in the nearest time. It's just slightly add information on the subject that we discussed yesterday in the Forex report concerning what United States Treasury intends to do currently and how it could impact on the markets in general, what tools they would intend to use and what to expect, what performance might be on the gold market. This first moment, second moment, some political issues, which is actually have the economic consequences in a longer term perspective, in perspective of the 8 to 12 months probably. It's actually two major decisions have been made. First is around monetary policy with the debt sale. So they have decided to just saving the system of United States dollar and bringing more liquidity with the rising the debt and printing more money. This decision has been made. It's rising and spinning up the inflation in general in the longer term perspective. Second is a political decision and what arena, on what the battlefield ground United States intends to act in the nearest time, whether it will be European battleground or they will turn to the China. And we suspect the latter. So that's gradually we will see it will become more evident, and already you will find some headlines on this subject. And that really changed the overall environment for the gold market when the two major global powers clashes by the elbows. It brings neither prosperity nor calm to global markets, and in this case it generally creates the healthy background for the gold upward continuation in the perspective of the year maybe. So that's some conclusions that we have made on the current situation. Speaking in the shorter term performance, I'll take a look on the daily chart. Our bread and butter trade has worked perfect. The suggestion that we have made 2 weeks ago concerning pressure on the gold to the current circumstances, with some few issues and technical factors that Fed or that Treasury will start to grab all liquidity that it could, and Fed actually could also rise rate in the nearest two meetings. That create the technical background that keep gold under pressure, and we do not expect any rally within the nearest 4-6 months probably, until the Fed will satisfy the appetite of the government and until it actually restore its cash positions on the Fed's account. So all these times will be some greater demand for United States dollar, and we do not think that gold will be able to start rally again. So if even we will not see significant downside drop, market maybe stabilizes on around the current levels or maybe slightly lower. But we definitely do not expect any rally if, of course, some extraordinary surprising factor will not step in. So that makes us consider mostly bearish positions on the gold market. The bread and butter minimum target is completed, but we suspect that it might be downside continuation by the few reasons. By taking a look at the daily picture, we have the tail closing right there, and it's no reasons to talk about the possible double repo by the few months. First of all, thrust is not as significant. Second, market has tested 1987 resistance. It means that most steam is out of the pot already. So those who were holding the short positions now already are mostly out here. So with this retracement, and it's difficult to trigger any bearish capitulation right there, so just by technical background of the double ripple pattern. So more probable that it will be just downside continuation taking out of these lows. Another reasons why we think so is take a look at the fall time frame chart. Recall what we talked about the untouched XOP. We said that it's potential risk for our reverse head and shoulders pattern. And now you can see what's going on. It's really fast acceleration. So existence of the XOP, the first additional bearish factor. Second additional bearish factor is of course the way how market is forming these head and shoulders. Obviously, when you're dealing with the bullish reversal pattern, I was talking about this million of times already, you do not want to see the domination of the bears. So this is actually the part of the pattern where the bulls should control the situation. But you have the opposite. This market actually is controlled by the bears. It's just collapsed. That has happened here, breaking the 618 level, breaking the harmony of the patterns. Market already stands below the lows of the left arm. And this is, well, big step in favor of the hand shoulders failure. So it will not be the purely failure just because hand shoulders has not been formed, but it just tells that it will not be formed and market will just taken out of the lows. Once XOP will be tested, next destination point is around 19, even 1905. This is weekly strong confidence support area. There's two targets for us on the next week to consider. I do not expect any significant bounce right from the 1922. Maybe some reaction will be, but since we have here a lot of probably stop orders, it will just let market to break through it, and maybe even without any respect. Besides, here we do not have a result, we do not have any significant fib support levels, actually no fib levels, and mostly this is like the free space. And in such circumstances, it's very difficult to count on any reasonable bounce here. So still, hopefully, if we get any pullback here, it will be a chance to use it for taking the short position. Take a look what the thrust we have here on the hourly chart. If we get lucky and market will show pullback somewhere at 1955, 1960, so we will get the bread body sell. That might be a good chance for taking the short position on the gold market. That's the scenario that maybe makes sense to consider right on Monday. So that's our view currently. Let's see what will happen.